You don't need to do anything extraordinary. If you want to invest like Warren Buffett, the Oracle of Omaha's investment style is not complicated, and many new investors are surprised. Buffett invests in great businesses, trading for less than their essential values, and then he holds on to these investments for as long as they remain great businesses. Welcome to Luxette, your go-to channel for all things luxury and finance. In this video, we'll dig deeper into Buffett's investment style. We will provide some real-world examples of how he's implemented his investment philosophy and list the actual stocks he does and doesn't put his money. Warren Buffett's investment philosophy in 8 steps. A lot of Buffett's investment process is proprietary, so we don't know exactly how he researches investments. These are some of the most important Buffett investment truths that you can incorporate into your investing strategies. Step 1. Look for a margin of safety. The cornerstone of Buffett's investment philosophy is prioritizing a margin of safety. In layman's terms, a margin of safety refers to the attribute of an investment that helps to protect investors from losing money. For example, if a stock trades for $10 per share, but that company's assets are worth $12 per share, then there's a $2 margin of safety. The value of assets should prevent the company's stock price from declining too significantly. Buffett's goal is always to pay less in a company's intrinsic value. As he says, a too high purchase price for the stock of an excellent company can undo the effects of a subsequent decade of favorable business developments. Step 2. Focus on quality. Warren Buffett doesn't invest in the junk. You won't see him buying businesses that are struggling regardless of how cheap they become. One of the best Buffett quotes new investors can absorb is, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Step 3. Don't follow the crowd. Another piece of Buffett's advice that is extremely important for beginner investors is, don't buy certain stocks just because everyone else is, but also do not aim to always be a debater and sell the stocks that everyone else is buying. As Buffett does, the best way to invest is to ignore the crowd entirely and focus on finding value on your own. Step 4. Don't fear market crashes and corrections. The goal of stock investing is to buy low and sell high, but human nature can force us to do the exact opposite. When we see all of our friends making money, that's when we feel like we should put our money in. And when stock markets crash, it's our nature to get out before prices drop any further. Buffett loves it when stock prices drop because it creates opportunities to buy at a discount. If you were shopping at your favorite store and suddenly learned that the entire store's prices were 20% lower, would you panic and run away? Of course not. Buffett embraces discounts on his favorite stocks and says, "Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble." Step 5. Approach your investments with a long-term mindset. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. That is one of the most important Warren Buffett quotes on investing that you can absorb. Buffett buys stocks because he wants to own those businesses for the long term, and not because he thinks their prices are going to rise this week, this month, or even this year. Step 6. Don't be afraid to sell if the scenario changes. A famous Warren Buffett quote from when he was asked about an investment he decided to sell at a loss, "The most important thing to do if you find yourself in a hole is to stop digging." While he certainly wants to own every stock he buys forever, the reality is that views change. It might surprise you to learn that, a couple of years ago, Buffett bought a large position in mortgage agency Freddie Mac. A few years before the financial crisis, he noticed the lender's management had started to take a necessary risk with the company's capital and decided to sell. A few years later, when the financial crisis hit, it became clear that Buffett had made a smart move. Step 7. Learn the basics of value investing. Warren Buffett is considered to be the world's greatest value investor. Value investing prioritizes paying low prices for investments relative to their values. A value investor's goal is to buy $100 worth of a company stock for less than $100, ideally much less. Value investors seek out and invest in companies with values that are well above the enterprise values implied by the prices at which the company's stock trade. Value investors like Buffett expect that the market will eventually recognize the full value of a currently undervalued company, resulting in an increase in the company's stock price and a profit for the value investor. Step 8. Research and reflect. Buffett regularly spends long days in his office in Omaha, Nebraska, but it often surprises investors to learn that he spends a lot of his time just sitting alone and reading or not doing anything at all. As he has been quoted saying, "I insist on a lot of time being spent, almost every day, to just sit and think." Knowledge is something that grows over time, and he believes that much of his success can be attributed to the accumulation of as much investment knowledge as possible. Which stocks does Warren Buffett invest in? Berkshire Hathaway's stock portfolio is worth hundreds of billions of dollars, and most of the stocks were selected by Buffett himself. While Berkshire's portfolio holds about 45 different stock positions, nearly 70% of the portfolio's value is concentrated in just 4 stocks. Here's more information about each of these top holdings. 1. Bank of America. Berkshire owns 12.6% of Bank of America's stock, and it was the company's second largest stock investment next to Apple as of late 2021. Buffett is a big fan of Bank of America's CEO Brian Moynihan and the rest of the bank's management team. The company's stock regularly trades for an implied valuation relative to the book value of its assets that is below of its big bank peers. Bank of America is also an excellent dividend stock, prioritizes share buybacks, and has grown at one of the fastest rates in its peer group in recent years. 2. Apple. Tech giant stock is the largest holding in the Berkshire Hathaway portfolio by a wide margin. Berkshire owns 5.5% of the Apple stock, which was worth more than $150 billion as of late 2021. Buffett loves Apple not only for its sticky customers. It's tough to imagine a company with a more loyal customer base, but also for its pricing lower and top-notch leadership. 3. American Express. One of Berkshire's largest investments by percentage ownership, the company holds 19.1% of American Express stock, about $25 billion as of this moment. Buffett loves the company's valuable brand name and that it acts as both a payment network and lender in its transactions, which is why American Express stock has been a part of Berkshire's portfolio for 30 years. 4. Coca-Cola. Berkshire is a major investor in the beverage giant, owning 9.3%, $22 billion as of this moment, of the company's stock. Buffett in the late 1980s started accumulating Coca-Cola stock, which has been one of his most successful long-term investments. In addition to being a devoted customer, Buffett loves Coca-Cola's brand power and massive distribution network, both of which give it competitive advantages over would-be rivals. What are your key takeaways from this video? Do tell us in the comment section. Go ahead and click the subscribe button if you haven't subscribed to our channel and hit the notification icon so you won't miss out on our videos. Don't forget to give us a thumbs up.